Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is June 20th, 2012. Lots to talk about, so let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. Alright, let's kind of zoom in here and see what kind of happened today. Today it looks like we just got this little down candle here. We still held the 50 moving average here. And what's interesting and what's becoming more apparent is this 135.44 level here. We could not close below this 135.44 level. We could also not close below this 50 moving average. So, to a normal eye, this looks like just a normal day, like the previous day. But actually, let's take a look at what actually happened intraday. But before we do that, let's just continue to look at the daily chart. Let's move this line out of the way. Again, this line here was taken as a average or a possibility of price prediction based on this, descending wedge here. So if we get this little this line here, we put it in the middle of the descending wedge, and then we put it at the breakout point. We actually get a point of reference here, which is about 137.32. Okay, so this is not part of the actual candle. So what actually happened was we have this we had this up move, and then we consolidated right above this upper trend line here, and we were able to hold this 20 moving average, which kind of dictated that or hinted that we may continue higher, right? Up move, consolidation, and then sure enough we broke higher. There was a 135.06 level. I deleted that level so we wouldn't get confused anymore with that. That was an intraday trade. That one held up pretty well, but the 135.44 level was the level that I told you that any level that gets pierced through would hold as support, and that's exactly what happened today. And then we still have this, obviously, this 137.76 level here. Let's just take an exact 137.32 level up here, which I'm pretty sure that we will not get through, not in the near term. Just have to remember that the volatility was high today, and it may actually continue tomorrow, so we have to be aware of that. And when we have high volatility such as earnings or big news like the ones we had today from the Feds, these calculated levels, or any other level for that matter, may not hold up as well as we expect. But one thing that we can do is, because after a big move up, we should be able to expect a somewhat of a pullback, and that's what we need to jump on, is on that pullback. We are still in a confirmed downtrend, so that's definitely going in your favor if you're short the market. But right now we still have to be aware that this 137 and this 139 level, this 139.98 level, are still plausible levels. The 139.98 not so much, but we could still get there. I mean, if you think about it, in my previous videos I always talk about Friday and Monday being low volume days, including days before holidays and day after holidays. Now what's the next holiday coming up? That's right, July 4th is the next holiday. And because there's July 4th holiday coming up, and July 4th just so happens to fall in the middle of the week, the day before and the day after is going to be low volume days, which pretty much dictates that that whole week we could have a possibility of upside, I would have a more of an upside bias during that week, simply because not only during holidays do the Feds like to prop markets, but they're able to, simply because the volume is so low. Nobody's going to be selling unless there's really big bad news coming out of Europe. I mean, I'm going to have an upside bias for that week, and that could push us up into this 137 or 139 level. But I'm pretty sure that we do have a good chance of pulling back before we do that. But that's something that we have to be aware of nonetheless. Okay, so let's look at the intraday of actually what happened to the SPY. Alright, this is a 10-minute chart of the SPY. Let me just zoom in here so we have a better idea of what kind of happened. Alright, so there's two white lines here. I'm not sure if you can see it over the video, but we have this white line here and we have this white line here. Each candle is 10 minutes. So between these two X's here is from the start of the day to the end. And in the beginning of the day, we just traded sideways, and this was expected simply because if you look at the volume here, there's hardly any volume. And normally when the markets first open, you normally get a lot of volume, especially when the markets first open. In any case, we kind of just trade sideways, and the reason for that is everybody wanted to see what the Feds would do, or exactly what the Feds would say, etc., etc. Now around 12:30 p.m., right, this huge down candle here. So the high of this candle was 135.36. The low of this candle was 134.27. That's over $1 move in just a single 10-minute span. All right, so let's take a look at this, kind of break it down here. We had this down move, we consolidated here, and right after that, Uncle Ben says, well, we're going to continue with Operation Twist. I talked about Operation Twist, and a not a probability of QE3 simply because we have Operation Twist going on, and Operation Twist is supposed to end this month. But basically, what the Fed said was they're going to continue Operation Twist to the end of this year. Basically, what that means is that's going to be, a type of quantitative easing to the end of this year. It's not going to be as critical or as important as the QE3. So a lot of people, didn't like it per se. So and within 10 minutes, we had this huge down move. Now we came barely into this 200 moving average here. Let me kind of just zoom out, and we'll have this gap fill level right here. You see that? So if you had taken this as a day trade, let me just delete this line here. You would have went down into this gap fill level here, and it would have bounced just right up. And from this level right here, this level, let me get the price of this gap fill level where the expectation of a bounce would have been is 134.43, and the high of this candle here was 136.10. That's like over a little over $1 in just a matter of half an hour. Okay, so that's almost $2 in a little over in half an hour. Okay, let me just zoom in again here. Now, after this down candle here, there's some other news that came out in Greece. I forget what it was, or that they did something about the bonds or something like that. And then immediately after, see, the news really doesn't bother me. It's what the technical analysis tells me, right? We have this gap fill. We went right into it. We bounced up all the way up here, and then we almost went to a double top here. We didn't quite make it there, just like this 200 moving average. We didn't quite make it there, and we didn't quite make it to the double top before pulling back. In any case, we pulled back, we consolidated again. That's a bearish consolidation, and then we pulled back again, right? Where do we pull back? Into this double bottom. You see how this technical analysis works every single time. You could actually bring it all the way down here. Actually, if you had taken this trade to the long side right at the close of or at the open of these candles here, you still would have been in the money. Now the low of this would have been 134.63, and at the end of the day, we went right into this 50 moving average. We closed barely above it. Let me see if I can zoom in here. As you can see, we closed barely above it. We closed also barely right above this 135.44 level. So you see how this 135.44 is an important level. Now the question is, do we get a pullback tomorrow off this 135.44 level, or do we continue higher before pulling back first? Okay. Alright, so I really can't tell you what's going to happen tomorrow, but what I can do is tell you what I'm seeing on the charts. Alright, so again, taking a look at this daily chart here, let me just delete that little thing there. What we did create is somewhat of a doji candle. I mean, it's not exactly a doji candle. Actually, doji in Japanese means to meet in one place, meaning, you have the doji cross, something like this or something like this, where price closes where it opens. That's a pure 100% true doji candle. But when it gets close like this, where it's somewhat of a spinning top, kind of like a mixed spinning top with a doji candle on, again, and I've always talked about this in previous videos, volume. Alright, so you see how volume had decreased, right, as we went up in price, and then all of a sudden we have a doji candle which indicates indecision on volume, or higher volume within the past 3 days at very minimum, which is what I normally look for. This indicates a possible reversal, and we closed right above this 135.44. So we'll see what happens on that. Let's take a look at the 1 hour chart to see if we can get a better idea of intraday. Alright, to be honest, it's the first time I'm looking at the intraday chart. Right now, it's just a down move. Looks like sloppy, choppy, sideways consolidation before a possible additional down move here. Okay, so let's take a look at the dollar and see if we can get a better hint. Alright, this is a chart of the US dollar. This is the daily chart. Again, just previous history, I have a calculated level here at 85.23. I also have another calculated level all the way up here, which is 87.72. I rarely mention this in any of my videos because it's so far away, and we got to take this day by day because we're short-term traders. We're not looking for long-term investments. We just want to get in and get out as soon as possible. Alright, so in previous videos I said that we're going to get a lot of support here at this pivot point and this 50 moving average. Now here's the thing, let me just delete this line here and then delete this line here so it's less confusing. It's already looking like we're just coming straight down. It doesn't look like we may even tag this line here. I mean, the possibility is still there, but as you can see, the 50 moving average is slowly creeping higher. if this 50 moving average creeps higher right into this price, so say price comes down and this 50 moving average comes up, then I do expect a bounce in the dollar, in which case is inverse to the markets. And so if again dollar up, markets down, and vice versa. So if the dollar can come into this 50 moving average, then I do expect a bounce after that. What does that tell me? That tells me that there's a possibility that we may still get a up move tomorrow, or a continued up move tomorrow into that 137 level on the SPY. In which case, say the dollar comes down here, then the SPY goes into that 137 level, and then right at that same time, the dollar gets a bounce off this 50 moving average, and it'll just fall into place, perfectly just like that. I'm not saying the dollar can't bounce off straight from here, because if you look at the UUP, it's already into pretty good resistance. I'm sorry, pretty good support. Now this is the daily chart of the UUP, which is also the ETF that tracks the US dollar. As you can see here, so this is basically the US dollar, except it's you're viewing it a little bit differently. Okay, so right now we are currently already in this 50 moving average. We are already in this pivot point here. Unlike the other dollar chart that I was showing you, that we were close to it but not exactly on it. Now, if you notice here, we also have this gap fill here that there's a possibility we could get down there, as well as say maybe all the way down here, which is a gap window on the 200 moving average. So the UUP could actually come all the way down here before getting a bounce. Okay, but we are into some pretty good support here with this 50 moving average. In between these two lines here would definitely constitute a bounce, in my opinion. And the bounce would at least go up to this gap fill right here, and then eventually this 20 moving average will come back down, in which case we should bounce off of that. And that might be around the 4th of July time, where we have a lower volume, and the markets should have a little bit of a upside bias at that time. Okay, but we got to take this day by day, and then we'll see what happens right before we get there. Now, of course, with all this, craziness in the markets, we have to take a look at the VIX, because the VIX is the fear indicator. And like I said before, out of the three, emotions, the three basic emotions, which is greed, fear, and hope, fears being the strongest. In my previous videos of the VIX, you can see that because this is the fear index, we broke down from this rising channel here. We've back tested. We've tried to bring ourselves back into this rising channel. It didn't happen. We went right into this 200 moving average, and then from there it didn't look back, and it just came down, 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 down. Now, I had this line drawn in here in previous videos. You can check the other videos on the VIX, maybe about a couple or 2 or 3 videos back. What we did was we went right into this level here, and then this is why technical analysis is so great. It went right into this level here and then bounced straight back down, like it was a ceiling. Okay, so the VIX right now is telling me, well, right now we have some support here, obviously, and then we're going to ultimately have some pretty good support on this level here. But right now, what the VIX is telling me, and then we also had this 1949 level, which I should actually take out, because it's already served as support here. Remember, for my calculated levels, it hits it once. If it comes back up the second time, it's no longer valid. But what makes it valid is that it can be used as the resistance point again. Okay, so that's why I like to keep these levels on here for maybe intraday trade, or that kind of possibility of sorts. But right now, because even if this price was to come back over this 1949, it's still not valid as it comes back down. Okay, so now going back to the analysis of the VIX, we're going to get some really good support here if we're not already in pretty good support at this level here. All right, so there is a possibility that we can get some fear in the markets. Now, here's the thing. When there's no fear in the markets, basically right now what the VIX is telling me is there's absolutely no fear in the markets. Fear is just being depreciated from the markets. And when you take fear out of the markets, people are more willing to invest money into the markets, and therefore the prop the markets higher. So if the VIX continues down, then the market continues higher. It's just like the dollar, it's inverted to the market. Now, here's the thing about the VIX. When the VIX has this huge down move like this, that means there's no fear in the market. What does that tell you? That simply tells you that any type of bad news that does come out, fear is just going to spike like a rocket, similar to this green candle here. And when you get that kind of move, then we're going to get a huge downturn in the SPY or the S&P 500, which would give your short plays a pretty good chance of making a lot of money before the 4th of July time of the year. All right, so that's your 7-minute market update, and I have a whole bunch of stocks to talk about real quick. All right, Now, what I've done was I spent a few hours going through my whole watch list. I normally do this at the end of the week, but because of the volatility that happened today, and let me remind you, if the volatility is still the same tomorrow, I'm going to stay away from the markets. I'm still short the SPY. I'm in the money currently on the SPY, but I'm definitely going to stay away from any of these stocks that I'm going to talk about right now if the volatility still exists. And that's simply because even though levels work, you just never know what's going to happen and what kind of news the Feds are going to release to manipulate the markets. Manipulation in markets have been around since day one. It's only been looked at or viewed at now simply because a lot of people are losing money, they're losing their jobs, they're losing money in the stock markets, and so they have to blame somebody. And manipulation in the markets were always there. You just have to be aware of it and know how to trade, not against it, but with it. It's just an acceptance, kind of like the common cold or the flu. It's there. At first it scared people because people were dying from the flu, but then they come with some medicine for it and a cure for it, and now it's just a part of your life. It's just something that you have to be aware of, and if it's something you get caught into, you know how to get yourself out of. It's the same thing. So this is a daily chart of Walmart. I've been talking about Walmart for days now. I actually took the trade on Walmart right here, right at this level here, and then Walmart pulled down, and then I took the 50%, which I put after it hit the 50% mark, or which I talked about in the previous videos. I said I was gonna wait till it hits the 50% mark, which was a 67.21 level. I put a break-even stop. It went back up. It stopped me out break-even. So from here to here is I made made money off that short. All right, and then I said now I'm gonna wait for the $70.56 level. So if we do get that pop in the markets that it looks like we'll initially get and possibly initially get. I really don't know what's gonna happen tomorrow simply because of the amount of volatility, but this is simply what the charts are telling me. Then I'm gonna take a short at the $70.56 level if we continue straight into it. Now again, if any type of consolidation happens before it, like it goes almost to the $70.56 level, this $70.56 level is no longer valid simply because if it consolidates under my level or right close to under my level, it's kind of building power. It's kind of like powering up before it can bust through the ceiling, which is this resistance line here. So that's Walmart. Let me just continue on to these other charts here. All right, unlike Walmart, where I said that you really don't want to short the strong stocks because any type of bid in the markets, these are going to be leading stock market. These are stocks like Walmart are going to be stocks that are going to be leading the market, and that's not where you want to be. You want to be shorting stocks in a downtrend market where it's going to be, if the markets do catch a bid, your stock in weakness isn't going to hurt you as bad as a stock in strength. Right now, Walmart is in relative strength. Oracle, on the other hand, is above the 50 and the 20 moving average, but is still below this 200 moving average. Okay, right now I kind of like Oracle at this level here. We have this gap fill level, which is at $29.12, and this is for a short. And this is my opinion only, and not a recommendation. Okay, so just remember that. I'm just showing you what the charts are showing me. We have this 200 moving average here, and yes, I do have a $29.04 mathematically calculated level, as well as a Fibonacci 618 level, all in this area right here. So if we do get a little bit of a pop in Oracle tomorrow, based on what the dollar is showing, that we could drop just a little bit before we pop higher on the dollar, which would be inverted to the market. So I would expect maybe a little bit of a pop in the markets tomorrow before we drop down lower. That's a possibility. If that can push Oracle into this level here, then I would probably look into taking a short, depending on what the intraday chart is telling me. If the intraday chart on the hourly or the half an hour is telling me that reversal could be possible, then I'll probably take the short on Oracle and see what happens. Okay. The next chart I want to show you is Nvidia. Nvidia is also a stock that's in relative weakness. Weakness in regard to it still being under the 200 moving average. Yes, it's still above the 50 and the 20 moving average, but it's still below this 200 moving average. Now, the thing about Nvidia is that what I really like is this $14.96 level here. It's a calculated level. It's a $14.96. What I really like is when I make a mathematical calculation and it ends up being right around an area of resistance that you can obviously see. It has this Fibonacci 618 level and this gap window level over here. Okay, so if price can just somehow get all the way up here, then yeah, taking a short on Nvidia is something that I would definitely probably do. In addition to that, we have this level right here that I'll definitely look at an intraday trade. It's a 50% Fibonacci level. You have this pivot point here, somewhat of a pivot point here, and you have this 200 moving average that it could definitely get a small little pullback off of. Okay, but I really like this level up here. This level here, I really like as maybe intraday trade if at all possible. Okay, so let's move to the next one. All right, JP Morgan. JP Morgan closed above the 200 moving average. It's still below the 50 moving average, but the thing is, it closed above the 200 moving average. It's currently above the 20 moving average. So this stock is gaining some, some strength, especially after the quantitative, well, I wouldn't say quantitative easing, but the continuation of Operation Twist, which is basically the U.S. government depreciating the dollar because they're going to print money, right? And that's what that's what the markets like. We have this 50 moving average here, along with this gap fill. Okay, if we can get to that level, intraday trade will be considered, in my opinion, because it would also be a double top of somewhat on the intraday. Okay, but the level I really like is this $41.11, which is a calculated level. We're also in this Fibonacci 618, and it's a gap fill, right? So around this these two levels here, or in between these levels here, is where I would consider taking JPM as a short on a swing trade. Okay, so that's JPM. Now remember, all these levels is provided that we do get another bump in the markets. Okay, well, I mean, well, it doesn't really necessarily have to happen, but we had a mixed plate worth of stocks today. Some were up, some were down. So you just never know what might happen tomorrow. Okay, so this is a quick snapshot of Intel. Intel, I have a calculated level here at $27.88. All right, and then we're at this pivot top here, so this looks pretty good. It doesn't look as strong or as good as the other stocks. Why? Because Intel is a strong stock right now. I mean, it is in a confirmed downtrend, but if you close above anything, if I take this trade at this 27.80 and then close anything above this candle here, then that tells me that the trend has changed, right? All we would need is a higher low, and then Intel is gonna blast off to the top. Intel is still still a stock in strength and relative strength, and compared to the market, simply because it's still above these moving averages, and they're all turning higher. And in the short term, if you look at this, it is in a confirmed uptrend in the very short term. But it's very close to this 27.88 level, so there's a possibility that we could at least get a small intraday bounce for there on Intel. Okay, moving on. Here's a chart of Costco. Costco is in a pretty nice double top here. And again, I like to explain double tops to people. Basically, I'm running out of time here, but people who bought here is suffering and is in pain all the way through here. So, they're just praying, which is, the emotion of hope that they can get out break even. So when price gets on to the price that most people bought it from here, and this was on pretty higher than average volume, then they're going to get out at break even. And that's simply what it's doing now. It's already pulling back. And Costco is one of the stronger names, simply because it's again above the moving average and is continuing higher. I do have a calculated level, believe it or not, all the way up to $95.14. I would kind of stay away from here unless it hits this 95.14, simply because I have this trend line here and it kind of coincides with this 95.14. I mean, it's already pulling back here. I mean, we could actually consolidate first before we push higher in this 95.14, maybe around the 4th of July time, but something to keep an eye on. Again, it's a stock in relative strength, so we kind of want to stay away from that if we're planning on shorting, because like I said before, if the market catches somewhat of a little bit of a bid, these are the stocks that are going to be leading the markets. Okay. This is a daily chart of Caterpillar. What I really like is this 50 moving average here. We also have this 200 moving average lingering right around here. And last but not least, I have this mathematically calculated level at $96.15. And we're also at this Fibonacci 282 level. So, it's a pretty good resistance point here. The only problem is we are already trading on higher volume. So this actually could reverse back down already on Caterpillar. But you know what? If we can get here, and I doubt it, but if we can get here up in this level, then I'll consider taking this as a trade. This Caterpillar is much more unlikely to happen than the other stocks that I just previously talked about. But I'm just going through my watch list. I'm letting you guys see what I see, and I'm just picking out what looks good to me. Okay. This is a daily chart of Citigroup. The code is C. Now, what I really like is this, gap window here, and then we have this gap fill here. Now, the thing about Citigroup is we're right into this 200 moving average, and we have the 50 moving average, and we have the Fibonacci 382 level. Right around this level here would be a nice short, in my opinion. Okay, so that's for Citigroup. And Citigroup, doesn't move as fast as JP Morgan, but if JP Morgan lands in the same resistance point as Citigroup around the same time, then it would make sense to me to take maybe a quick short. And in fact, you know what, it might be safer to wait for Citigroup to get all the way up into this 50% level of the Fibonacci, right in this pivot point here, right around this level here, which is about $31.50. Okay. All right, this is a chart of Amazon. We have this trend line here that we could not break through. I do have a level here which is 231.61. If we can get there, it looks like a pretty good short to me. And I still have my eye on this 197.73 for a long position. So Amazon's kind of just trapped in between these two. Ultimately, if Amazon can get to this 240, I mean, this 231.61 would be a good intraday, but this 240.70 level is something that I have my eye on. And if we take a look at that, that goes right into these pivot points here, just like that, perfectly. That's what I really like about these mathematically calculated levels when they line up with pivot points there. Okay, so I'll keep my eye on Amazon for a swing short there. This is a chart of ABX, which is a mining company. Now, this is very intriguing to me simply because we have this down move. We broke down from this rising wedge here. We didn't get the price prediction, which was down here. All right, and that's where I would have went long on ABX. What we did was we came down, we consolidated bearishly. I would have expected another down move here, but we're just floating up. Now, this float up could also be viewed as still a bearish consolidation pattern. Okay, until we close above here, this is going to be a consolidation pattern. Unless we blast up straight up one day, and that could happen with all this volatility going on and with the Fed announcements, etc., with quantitative easing. Now, gold, the ABX pretty much follows the GLD, which is the ETF that tracks gold. I really should talk about that tonight, but maybe I will. Okay, so in any case, it looks like it's still setting up for another down move because it's bearishly consolidating there. Okay. And then Apple, we have, let me load my drawings for Apple here. We still have this, you see, amazing how these mathematically calculated levels are holding up. It went right into this 590.36 level again, all right, as you can see. Let me just move this down here. Okay. And then we came back down and we landed right on this 581.07. So it's like these two mathematically calculated levels, they were put in yesterday or the day before yesterday. So the 590.36 was the day before yesterday, and this one was yesterday. So this 581.07, I mean, it's just trading right in between these two levels. My eye is still on the 607.62 before I take a swing short on there. And there is a possibility that Apple can get all the way up here, and then of course obviously a double top there. Okay. All right, this video is getting absolutely unbelievably long. However, I have to talk about gold. Now, gold, I did mention that we did break down from this lower trend line here, right? And we continued that breakdown, went right into this 20 moving average and got a bounce, and then we went right into this 50 moving average and then got a pullback. So what we ended up with here was with a doji candle on high volume. But what is that really telling us? It really doesn't tell us anything. When we have this down move here, we have this doji candle. So this means that we could possibly test or retest this bottom trend line here. I don't like the gold pattern at all whatsoever because it's giving me contradicting signals right now. I mean, if we were up here and we came down here and then we have this doji candle on higher volume, then I would take the trade, a long trade, right? But we didn't do that. What we did was we came up here, we bullishly consolidated for another move up here, right? That was what the pattern was telling us. The pattern failed, and whenever you have a failure of a pattern, the move is normally big. So there's a chance that gold could continue down. A validation of a down move in gold is any close below this candle here, and then I would expect the gold to actually reach here and possibly already a double bottom. Now, that would mean that this level here is invalid, but we'll see what happens tomorrow. If we close below this candle here, then I don't think this level here is going to be valid, but it really depends on what the pattern looks like. I mean, if we come down, we bounce up, and then we go straight into this 160, then this pattern is still valid. But I'm gonna have to take this day by day on the GLD simply because right now the everything is it's not working out the way I expected it to. Okay. In any case, we're way over the time right now, but this is a 7-minute market update. God bless to you all. Thank you for watching, and I hope to see you in the next video.